We're going to talk about all sorts of different types of Fibonacci's today. We're going to go over how to use it as an effective trader. Also, we're going to go over Fibonacci retracements on the y-axis, but also on the x-axis. We're going to go over time Fibonacci's as well, which is something that I think a lot of you guys are going to really like. Well, webinar won't go too long. This is probably a topic that won't take more than like 20 to 30 minutes is what I'm kind of thinking. Got a few exercises we're going to do in Chat GPT as well, where we will ask the AI about the best ways to use the Fibonacci as well. I'll show you my ways of using it, so I think this will be really awesome. Before we get started, as always, need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful, so please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you go through that process each and every time that you take a trade. All right, guys, well, let's go ahead and get started. First, let me ask the AI, what is a Fibonacci? Let's see, what is a Fibonacci? Fibonacci in trading. Let's do Forex trading specifically, Forex trading. And let's figure this out. Okay, so it's a popular technical analysis tool based on the Fibonacci sequence, a series of numbers where each number is the sum of two preceding ones. So 0, 1, 1, and then 2, 3, 5, 8, 13. Most commonly used Fibonacci levels in trading are derived from ratios between numbers in this sequence. This, I forgot who made it, but some guy with the last name Fibonacci. He cracked this code, and Fibonacci is like a sequence of numbers, like as you read right there in the first sentence or two, that's found throughout nature. So how shapes are made, Fibonacci is found in that. Most plants and animals, humans, the way they're designed or built, have Fibonacci sequences built into them. Like the human face is a Fibonacci sequence. Just the distance between the lips and the nose, the eyes and the hair, and so on is a Fibonacci sequence. You look at flowers, or every flower is a Fibonacci sequence, just the way the petals are designed. You look at most fruit. Most fruit is a Fibonacci sequence as well. Fruits and vegetables, like everything, pretty much anything that grows, is built. Anyway, you can decide what that means to you personally. That's not really what we're here to discuss necessarily, but it's a pretty cool concept at the very least. And what's also interesting is that the Fibonacci sequence is found within trading. So the way markets move up and down on a day-to-day basis within time frames, up and down the 1 minute chart all the way up to the weekly charts. Fibonacci's are found throughout the trading, just throughout the real estate of the charts, right? So very, very cool. So let's read more into this. So these are key Fibonacci levels in Forex. So you got retracement levels like 23.6, 38.2, 50, 61.8, and 78.6. Then there's also Fibonacci extensions. This is or expansion levels that you got 127.2, 161.8, and sometimes 261.8. So how are they used? So Fibonacci tools, or specifically the retracement tool, which is what 80 or 90% of people use when we talk about Fibonacci's in Forex trading. They're used to identify potential levels where price may reverse during a pullback in a trend. So very, very helpful for people who trade in the trend, like, trend is your friend stuff. So people who like to trade in the direction of which way the market's going, you find a pullback in the market, Fibonacci is often a great thing to use. Also, people right now, you watch crypto going up so much right now. People are using Fibonacci's like crazy. In fact, we may even look at a crypto chart. When crypto pulls back, it often pulls back to a Fibonacci retracement level, and then it continues on its merry way back to the upside. So, and then you have Fibonacci extensions, what we just talked about in brief. Okay, let's see. Yeah, market psychology is a reason why somebody might use it. Key levels, You can combine it with other tools, and that's something I'll mention too. This is not a standalone tool. You probably shouldn't use the Fibonacci as a tool to use by itself. Usually, it's just a confirmation of what you're already doing. Although I do know some people that use the Fibonacci as a standalone indicator, and I actually, and some of them actually do have a lot of success with it. I don't find a lot of success as a standalone tool. In my opinion, I need more confirmation than just the Fibonacci, but that's just me. Okay, what other? I wanted to ask the AI another question about Fibonacci's. Oh, let's ask the Fibonacci. Let's ask the AI this. What is the golden ratio or golden pullback zone with Fibonacci in forex trading? Okay, let's ask the AI and find out. Golden ratio rate in forex trading refers to oh, nice. Roger literally got it before the AI. Yeah, so it's 61.8. So 61.8% retracement level derived from the Fibonacci sequence. Oh wow, shoot, let's go back up to there. Considered highly significant because of its presence in nature. So back to what we said at the beginning, mathematics. So the 61.8% retracement level is considered highly significant because it's most present in nature, mathematics, and financial markets. Traders often refer to the golden pullback zone as a key area between 38.2, 50, and 61.8 retracement levels where price pullbacks are likely to reverse and resume the trend. Um, so, uh, let's see why the golden ratio is important in forex. Yeah, market psychology, strong reaction point, high risk to reward opportunities. So, here's an example of the golden ratio pullback. Yeah, traders will enter a buy position at a pullback to the 60. It's basically 62% retracement. All right, cool. So that's basically that. Let's take a look at a chart, guys. So let's go ahead over here. Let's pull up the I don't know, just anything. And let's it doesn't matter because we can pull up any chart you want. In fact, if you have a chart you want us to look at, great, we can do that. So this is now the part that's most important is drawing your Fibonacci zone. Okay, so when you're drawing a Fibonacci, it's important to draw the Fibonacci from the beginning of a trend to the end of the trend. Okay, if you just draw Fibonacci zones wherever you want to draw them, that's not really a Fibonacci. So the way you set it up is the most important thing because if you set it up incorrectly, then you don't really have an edge, right? Um, so first of all, how do you find a Fibonacci? So in TradingView, which is the most common trading platform out there, you can find Fibonacci's over here under on the left side under it's like the first indicator actually. It's just the fib retracement. You can also pull up a Fibonacci just by clicking or by pressing down Alt and F at the same time. In fact, let's try that. Alt F. Oh, let me try that again. Alt F. Oh, it's not working for me for some reason. Oh, because no. Let me try that again. Alt F. There we go. Perfect. I was clicking the wrong button. Yeah. So it's so common. They even have a quick key to the retracement because it's so common to use a Fibonacci retracement. So you can click Alt F in the chart on TradingView, or you can go right here and grab it. I use it so much that I actually have it in my quick tools up here. So right here is fib retracement. So if I wanted to draw a downtrend, I would start at the top of where the trend began, and then I would take it to the bottom of that trend right there. And that would be a correct use of the Fibonacci. Okay. So now if we look through here, you can see the different spicy zones of fib retracements, right? You got the 23.6, here's the 38.2, 50%, 62.62 right there. You got the 76 right there and so on. So this is, like I said, the perfect this is so the market, like I said, is likely to have reversals in these zones. Now, again, where's the golden ratio? It's around 61.2 or 61.8, sorry. So right here, isn't it interesting that the market pulled back? So like if you look at this pound yen, here's this huge downtrend that began right there and went to there. The retracement took us all the way up to the 61.8, which is right here. And then not long after it went up to the 61.8, that's when it pulled back. There's a reason for that, right? Like that's literally a major Fibonacci retracement, right? Now let's draw an uptrend. So we've got this market that ended the downtrend right there, and then it went all the way up to there before it started to pull back. Right now, we're actually getting pretty darn close to the 62%. So this pound yen is like the 62% retracements right here. So if this were to go back up, this is probably not a bad place for it to maybe do its thing, is right in here. Maybe it goes down a little bit more and then eventually goes back up. But there you go. Um, let's keep looking, guys. This is fun. Like drawing Fibonacci's are fun to do. Um, so, and you can do it within smaller zones. In fact, let me show you how to use this. Like this is a higher time frame. Let's go to like today's market. Let's go to a 5 minute chart today, and let's use a Fibonacci out here. So, let's start from a major pivot point to a major pivot point. We could even draw a Fibonacci. This is on a 5 minute chart on the pound yen. Could draw this one out today. This is the highest high in this range. So this would be an appropriate place to put your Fibonacci retracement is right there and then take it all the way down to there. Okay, so where's the 62% there? 62% is right in this area. So that might not be a bad place to look for reversals, is in that spot right there. And again, that's if you want to look for the golden ratio. There could be reversals that happen, like right here. You could have reversals that happen right there or right there even. But the Fibonacci specifically, you're going to be looking at retracements that coincide with that 60 that golden ratio, like we mentioned from the AI that we just looked at. It's going to indicate that. So that's pretty cool. Let's do another one on the lower time frame. So, yeah, right here. So major pivot point would be right here in this consolidation down to the end of this trend, which is right here. The market looks like it came up to the 50% retracement, almost exactly to the 50% retracement, and then it started to pull back again, right? That one didn't quite go up to the 62% retracement. Didn't necessarily need to do that. It won't always do that. But like I said, that's kind of the golden place. Okay, let's do one more fib retracement. And then I'm going to show you guys the time Fibonacci. So this is the one on the x-axis. And this one has been really cool. And it's very thought provoking. So I'm excited to share that one. I think you guys are going to like that a lot. So again, we can use the same currency pair if you want, or we could go to something totally different. Um, yeah, let's go ahead and I don't even know. It doesn't matter. It literally doesn't matter what we do. Could do let's see. Sure, like this move right here. So from this pivot low to that pivot high, let's see what we can get there. So, and again, it's just the way you draw these out, you just draw them on major pivot points. So right here, pivot low, and you take it to the pivot high. Okay, so now you're looking at this and you're like, okay, these are all major Fibonacci retracement levels. So the 23% right here, the 38, 50, and then 62 right here. And then you also have the 70. This is also the 78 or 79 retracement level. And so you can actually see the market came down here to the 23 and then continued, resumed. That's actually one of my favorite retracement levels is the first one, the 23% retracement, especially in a trend that's really bullish, like a trend that's going up and up and up. In fact, maybe we'll look at a cryptocurrency in just a second. And then, if it goes to the 23% and then just has a quick little pullback, then it'll just continue higher. In fact, we'll look at a few in just a moment. Okay. And then anyway, I think this ended up collapsing down to this one was interesting. This one went all the way down to the 74% retracement right there and then resumed. Looks like it formed some consolidation right around the 62 or golden ratio right there. and then continued higher.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
All right, let me go ahead and show you guys a time Fibonacci. Actually, no, before I do that, let me go ahead and show you. Let's go to the cryptocurrencies. Let's go to, like, say, Bitcoin. All right. And let's go take a look at these Fibonacci retracements over here. I don't want to delete everything. In fact, maybe I should use a different Bitcoin chart because I've got a lot of stuff on that other one that I'm using right now. Okay. So here is Bitcoin. Okay, so you want, again, the correct way to draw your Fibonacci is to take it from, and you can pick any pivot low to any pivot high is fine. But the best way to do it is to draw from the most, like if this is the lowest pivot low right there, then you would draw there and draw up to the most major pivot high, which would be right there. So that does appear to be the lowest low, or even right there looks like yeah, that looks to be the lowest low right there on August 4th. So this would be the correct way to do it right there. And so the 23% retracement would be right here on Bitcoin. So if Bitcoin got back to 87,000 and a half, so like let's just say 88,000. If we got back to $88,000, that would be a 23% retracement. And that would be a supposedly a great place to buy Bitcoin if it's in a tremendous rally, which obviously it is. So I like to buy on the first retracement level on something that looks very, very bullish. Or if something looks very, very bearish, I'll sell at the first retracement level. Again, it has to be something that, you're convinced is definitely headed lower or headed higher. And then obviously if you're trading like stocks or Forex, if you can wait and be patient for something to go back down to the golden ratio, that makes the most sense. And the golden ratio would actually take you back. If Bitcoin could get back down to $68,000, that would be the golden spot. The chances of it getting back to 68,000 though before this bull rally's done, almost impossible. It would be very difficult for Bitcoin to go down to 68,000. But if it did, that would be a tremendous buying opportunity. Holy smokes, like very, very good location. And you can see that it is. I mean, like you've got not only is it the 62% retracement, but it happens to be the next major support level. You got all this resistance that's now support right here. Over here, you've got all this whatever this is over here as support. Tremendous zone if we can get that. I just don't know if you will. So that's right, Roger. So we're gonna hold for another 12 months. So in fact, I'll just show you guys this. This is why we're holding crypto for another 12 months. Just on a side note, if you could take a look at this, let's go to that weekly chart. This is why we're holding crypto for so long. So this is an all-time chart on Bitcoin, and we're in the middle of the bull cycle because every October, November of the year of the halving is when it starts to go parabolic. So back in 2012, October 2012, that's when the rally began and it lasted a year. October of 2016 lasted a year and then it pulled back. October of 2020 was the year of the last halving before this year, and then it rallied for a whole year and then pulled back. That's what's probably going to happen again in 2024 is we had a halving earlier this year. We're in October. Actually, we just passed October now and November. And so now we're well into we just started, crypto summertime. And this rally will continue for about another year. I will probably start selling my crypto on a scheduled basis, though, Roger. Between May or June is when I'll start to sell slowly, though. And I will schedule my sells so that by November, December of 2025, I'll be completely out of crypto. In fact, I won't own any crypto in December of 2025. None. People, I had people last week. I had several people reach out to me. They asked me when I'm going to sell, and they thought their minds were blown. They were like, "You're going to sell your crypto?" I was like, "Yeah, definitely going to sell it." Yeah, there's an exit plan, that's for sure. Um, and so by this time next year, I won't even own any, none, not even a nickel worth of it. In fact, I'll actually start to short crypto. Um, um, I'll actually start to short it, and then by the end of 2026 will be the bottom of the cycle, and then maybe we'll start to buy again at that point. But anyway, so I'm just following the crypto cycles right here, and so great question, and yeah, that's going to be the game plan. Nice. You bought all you could in September. Literally so smart. That's like such good timing. Holy smokes. Wow. And that's all you can do, right? Like all you can buy. Obviously there's not enough to um obviously you're not going to be able to buy the whole world's worth of crypto. I bought a bunch too, but I'm always like, oh man, but I could have bought more. But at the end of the day, you got to be satisfied at some point, right? You can't just be like, oh, I'm gonna just keep buying and borrow all this money, and you can't be reckless either. You know what I mean? So, all right, guys, let me show you. Let's do a time Fibonacci. So let's go back to Forex. Let me show you. Let's actually go back to the pound yen. I'm gonna show you guys how to use a time Fibonacci. Okay, these are really cool. I ran into this on my own several years ago. I've never even seen a video. Actually, no, I looked up one video once, but I haven't really seen anybody use this very well. And so I want to show you guys how to use this. So a time Fibonacci is like this. So in TradingView, you got the retracement that we just looked at. Here's a Fibonacci time zone. The way this one works is you click at the most major pivot point that you can identify in the market, and then you take it to the next major pivot point, which would be like right there. And you'll see with uncanny results that usually that this will predict the next major pivot in the market. Okay. So we put this right here at point A, and then we put this right here at point B, and then the rest of the Fibonacci did the rest of the work for us. So you'll notice there was a major pivot right there, or around this area was a major pivot. There was obviously a major pivot right there, like clockwork. Isn't that insane? So crazy. Like I'm like blown away already by that. And so now this is saying that this is going to have the next major pivot on the pound yen based off of where we did everything is going to be right here around Christmas time, actually, will be the next major pivot. So maybe pound yen actually continues to pull back until October 25th, potentially just based off of this alone. I mean, that's the only thing we're looking at, right? Let's do it a different way. Let me delete all this. Let's do another Fibonacci time zone. Let's go from this pivot. This seems like a more major pivot spot right there to this one right here. And let's see if these kind of line up a little bit. Um, this there was a little bit of a pivot that happened right there. This one I'm kind of surprised with. I thought there would be more of a pivot change there. There wasn't, but this one definitely did. Definitely had a major pivot change right there. That was like the top of the market right there. Is that the 62% retracement too, or no? That's no. This is not doing that. Let's see. This would be 23, 38, 50. No, that is the 62. Yeah, so that's the golden spot right there. And sure enough, that worked out great. And it doesn't really matter how you set these up because you just have to do it at major pivot points. So I could even like if I wanted to do a Fibonacci time zone that was much more expanded, I could be like, you know what? I want to draw from here to this juncture right here. And this would work fine. And you can actually see that actually worked out great. That was a major pivot right there. Um, that one just happened last week. And then if you take this over here, the next pivot, it doesn't even show me the date of that. That's going to take you into January right there. So you can leave this up on your chart and wait for that to happen, and then yeah, that should indicate a major pivot change in the market. So pretty cool. Let's go look at a different chart. Let's go pick up different currency pair. Let's go to I don't know, the euro pound, sure. Or actually let's do something more major like the euro dollar. How about that? Euro dollar. Okay. And yeah, let's just go back here. Let's go back in time and see if we can predict a few things. So this looks like a major pivot right here, doesn't it? Yeah, that's a major pivot low. Where's the next major pivot high? I would say probably right there. You could even do this one if you wanted to. It doesn't matter. You just pivot low to pivot high, and then you just drop it, let go, and then you just go forward, and then you see if those are major, pivot zones. These ones not so much. I'm a little surprised. Little maybe something here, maybe something going on there. Definitely right there. Holy smokes! And that is the 62%. Five right there represents because you're basically saying this is 0 to 23, 23 to 38, and then you got 38 to 50, and then you got uh, 50 to 62. So that's the golden ratio right there. And sure enough, that's the one that actually had a major pivot right there. I mean, nothing crazy, but like the market definitely pulled back right at that location. Next one coming up is over here, not too far away. Let me go ahead and delete this. Let's do another one. Like, let's do one that's like a little bit shorter in nature. So we have from here to here. Yeah, this is pretty cool. Well, it's all right. You'd think there'd be a more major pivot right here. You'd think this one would go north because that's where the next one is, but not all of them work. So it's not I wouldn't make this your let's put it this way. You wouldn't just like you wouldn't use the Fibonacci tool as as your entry necessarily, but it's more of a confirmation. The same thing I would use Fibonacci time zone is just a confirmation to what you're already doing. So if you were already thinking of saying like buying down here, if you were going to buy down here and you found out that that was a Fibonacci time zone pivot, to me, I'd feel a lot more comfortable about buying just because I have that confirmation. There's a good pivot right there on the 8. All right, I'm going to go ahead and delete that. Yeah, if you combine it with order blocks, yeah, it could be excellent. Absolutely. Um, okay, let's go check out something. Let's do a look at maybe one other one. And like I said, we'll just keep this class 20 to 30 minutes plus because we don't want to keep it I don't want to go too long. Maybe let's look at gold. How about that? Let's just take a look at gold and let me delete all this stuff. Do gold. Let's see if gold follows this Fibonacci. I bet it does. Let's do like a shorter one. So let's just go from this pivot to this one right here. And let's see what that lines up for us. So let's go from pivot to pivot. Yeah, pretty darn close. Pretty darn close. Um, I think it's been interesting that the five on here, so basically the 62% retracement, that seems to be the more significant pivot because I've noticed the two and the three, these ones aren't as significant. The two and the three. Have you guys seen that too with me? I at least that's been my observation. Two and three, not so good, but the five has been almost spot on each time. This one caught it really nicely, like right around there. It started to collapse. This one was good. Here's the eight. Right at the eight, that started to rally to the upside. This one was close. Here's the 13. Not a little too late, but yeah, I was getting close. That is cool. That is really cool. Let's delete all that. Let's do another one. Yeah, sure. Let's go from like this one, that pivot right there, to that one right there. Okay. Okay, this one, two and three, not too bad. Like that was definitely a major pivot right there. Got a little something right there. Let's see the five. Does this one? Oh, wow. Look at the five, guys. It's always the five. It's always the five. Sheesh. Look at the five. See, it says five down there. That's the one that just seems to freaking holy smoke. And here's the eight. Not bad. That is cool. Holy smokes, guys. This is fun. Let's do another one. Um, yeah, this looks like a goodie. Okay, so let's go from this pivot. Basically, when a trend line stops. So major pivot, put it right on the dot. Okay. Two and three, sure. Let's see. Uh, all right. Not too great. The three was good. Let's see. Is the five any better? Yeah, it was the beginning of a. This was like the very beginning of this huge move to the upside. Um, then you got this eight. That one not too good. That's probably the worst one on here. Yeah, not too bad though. That's really interesting. Let's see. Lauren says, "What trading view package would you suggest purchasing?" They have a 70% Cyber Monday deal. Sorry to distract. No, that's a great question. I use this. It's the Essentials package. I think it's like 12 or $13 a month, and I pay for it annually. That's what I've been doing. I think like every August or September it bills me. Great time to do it now because you got the cyber deals. It's the essentials package. That's the one. It's the one without ads, and it gives you like one or two extra indicators on your charts or something like that. Um, it really is nice to not have ads because it pops up like every minute in this bottom left corner. If you have TradingView with that's free, um, yeah. So I just pay for it annually. That way, I get it's a little cheaper that way in the long run. Yeah. Yeah, it's called Essentials. So I don't know the other ones. Yeah, I don't think you need all the gadgets from the other ones, and you can always upgrade to the other one if you need it. But Essentials is the one that I have. Okay, let's do another. Oh, guys, this has been fun. Holy smokes. Okay, let's do. Yeah, sure. This one down here. So here's a major pivot right there. That's the lowest low. Let's take this to this pivot point right there. So I got two and the three. These are actually not too bad. Here's the pivot two. Here's pivot three. Here's the five. Okay, a little underwhelming though with this one. Definitely still shot up from that five there for a brief period, but a little underwhelming. Yeah, they're not always gonna do that crazy stuff. Let me actually see if I draw this out just a little differently though. Let's go back to here. Let's go to the end of that trend. So here's trend to end of trend. There's a pivot. There's a pivot. Let's say the five. I'm really curious to see what the five does. Okay, here's the five. It's all right. Like that's sure beginning of a, that's close to the bottom of this market before it takes off here. So let's see. Yeah, you bet. So Roger says, can we get a screenshot of your Fibonacci color settings? Mine are all black for sure. Yeah, if you come over here to, oh, actually, I don't know what. Oh, here's how you're going to find out. Click on this, click on settings. Here you go. This is what I've got. So my style is all red right here at these different zones. And you can even change your sequence. It looks like that's cool. There's my visibility. Not sure what that. There you go. Yeah, let me know if you need to see that again or if let me know if you need to see that again. So, all right. Cool. We'll just look at one or two more and then we'll start to wrap up here. Um, it actually might be cool to look at like a fib sequence on like crypto. Might be interesting. Um, could do that. We do this one right here. So here's this pivot. We already did that one. We already did that on gold. Let's go. Let me actually like go look at one that was more recent. See if we can, like here's this pivot to this pivot right here. And that's not too far off. The five though is out here somewhere, which is the one that I think I'm most interested in because I think that's the golden ratio one. Because like if this is the 23, 38, 50, and then this is represents the 62, then I think that that's going to be your more golden ratio on the time Fibonacci. Um, and again, you can set these up however you want. You can go, like I said, you can go from here to here type of thing. You could even go from there. You could even go like just to there would be fine. And sure enough, that works. You could go from there to there, and that gets you pretty close. Oh, see, look at the five on this one. Dang, that was perfect timing. If you go from here to here, just from there to there, sure enough, that was the three was a pretty good pivot right there. The two was, excuse me, the three, not so much. Um, but this five is coming up really soon. So maybe we get a good pivot right there on gold. Man, that's fun. That's really fun. Let me just do a shorter, like from there to there. Let's see what that does. Yeah, the five puts you right there. Yeah, it's all right. That pivot. They're not always going to be accurate. That's why I think you have to use it in tandem with your price action analysis on top of using it. Like if you're going to use it, make sure that you're also including your price action principles and stuff like that. The stuff we do in the live trading calls, using order block indicators as well will help. So how do you find that? So if you want to use the Fibonacci time zone, you just come over here in TradingView and you got the Fib retracements, and then the Fibonacci time zone is right here. And you also have Fibonacci channels, trend-based Fib extension. Don't know how to use those, but you've got those as well. I've used the Fib speed resistance. I've used the Fibonacci fans before. I haven't really liked them though, personally. Um, I've just done Fib retracement and Fibonacci time zone. So All right, guys. I think that's about it. That's all I really have to cover today. Hopefully that was helpful, at least to go over what the AI had to say about the Fibonacci. Fun exercise, obviously, going through the charts. Just giving you a little introduction on the Fibonacci. So, all right, guys, well, have a fantastic rest of your day. Thank you for coming, and we will see you guys in the next webinar.